During the 2008 crisis, we know that even after being greedy and giving out these bad loans, the majority of the bankers did not suffer the legal consequences of the housing crash. There was only one banker who was jailed, and the Big Short movie also mentions him. The name of the banker was Kareem Serageldin. Why, after such a big global crisis caused by all these bankers, only one banker faced jail time? Let's find out. Kareem Serageldin worked at Credit Suisse, and he was the global head of structured credit. There were 70 employees under him who managed $50 billion in trading positions. Kareem's main crime was to falsely inflate the prices of subprime bonds held by Credit Suisse to hide losses and meet performance targets. Kareem didn't do this on his own. He had the other 3 members of his team help him with this fraud. The other members were David Higgs and the traders Faisal Siddiqui and Salman Siddiqui. Kareem was their boss at Credit Suisse. Kareem's objective in doing this fraud was to avoid losses and appear profitable to receive bonuses and promotions. This fraud gave Kareem Serageldin a cash bonus of more than $1.7 million and a stock award of more than $5.2 million. Now, let's see exactly what Kareem's fraud was. In the second half of 2007, when people started defaulting on their loans, the housing market started to collapse. The index that showed the performance of the housing market was the ABX.
What's the ABX at?
What's ABX?
It tracks subprime mortgage bond value. Go back to sleep.
When banks were selling these mortgage-backed securities, which were primarily backed by home loans, they needed to mark the fair value of these bonds every day according to the ABX index movement on that day. When the housing market started to collapse in late 2007, the ABX index started to decline. As the index value declined, these guys needed to accurately record the decline in the value of the bonds. Credit Suisse at the time held a massive portfolio of $3.5 billion of AAA-rated bonds in a trading book named ABN1. This trading book, ABN1, was managed by Kareem. But as the subprime market deteriorated more in the fall of 2007, Serageldin became increasingly concerned that the value of the AB1 portfolio would show huge losses if they marked the position of the bonds according to the ABX index. So they chose not to mark those bonds correctly. So in late August 2007, Kareem and his team stopped accurately marking the fair value of their bonds and instead began to price the bonds in such a way that they showed they were consistently making profits. Before August 2007, the daily fair values of the bonds in AB1 trading books were set by using an automated pricing service called Financial Times Interactive Data, FTID. The FTID prices during that time period were generally at or close to movement in the ABX index. By the end of August 2007, the market had declined. The FTID system started showing a decline in the value of the AAA-rated bonds. The automated FTID system was tracking the market correctly, reflecting a weakening market for these mortgage-backed securities. At around the same time, senior Credit Suisse management implemented a new rule, where the firm's trading desks were required to produce real-time reports of profit and loss. Because of this new requirement of showing a real-time report of profit and loss, Kareem Serageldin was under intense pressure to show profit from his trading desk. So, at this point, Serageldin and David Higgs took on a hands-on role in monitoring profit and loss and the price of the bonds in the ABN1 trading book. Kareem ordered Faisal Siddiqui and Salman Siddiqui to manually manage the prices of the bonds in the ABN1 trading book to achieve daily and month-end profit and loss goals. On August 29, 2007, the FTID system tracked prices and showed a loss of approximately $75 million. Salman Siddiqui manually entered prices in the book and increased the profit by $95 million. In November and December 2007, as the markets declined further, the false pricing of the bonds by these guys not only continued, but even accelerated. By the end of 2007, Kareem and his teammates had enough market data that showed their bonds were highly overvalued. They knew that the housing market was going down, but still kept their bond prices up. While doing this fraud, they were also worried that Credit Suisse's price testing personnel would audit and find the falsely overvalued prices of these AAA-rated bonds. Despite knowing all this, a few days after this, Kareem Serageldin approved his unit's year-end profit and loss results without correcting the year-end mispricing. During the investigation, they found that in January 2008, Kareem and his teammates were talking on the phone, and they admitted that the year-end prices on their AAA-rated bonds were too high. Kareem also handled other similar bonds with a smaller overall portfolio valuation. They marked these smaller bonds 20 points lower than the ABN1. So basically, Kareem manipulated the prices of the bonds with higher portfolio values, and he marked other bonds correctly with lower portfolio values. Because of this price manipulation, on February 12, 2008, Credit Suisse reported net income of $7.12 billion in the year 2007, with fourth-quarter earnings of $1.16 billion. A few days after this, when senior management detected abnormally high prices on certain bonds that were managed by Kareem and his teammates, Credit Suisse again reported its fourth-quarter results on February 19, 2008. They issued a press release stating that the results it had announced just 1 week earlier were incorrect, and it was in the process of quantifying the error. On March 20, 2008, Credit Suisse announced that the actual fair value reduction was about $2.65 billion. The bank revised its net income for the full year 2007 downward from $7.12 billion to $6.47 billion, and for the fourth quarter of 2007 from $1.16 billion to $471 million. The main reason for this revision and lowering the income was the ABN1 trading book, which was managed by Kareem. It recognized a write-down of approximately $1.3 billion, approximately half of the fair value reduction of $2.65 billion announced on March 20, 2008. This is what Kareem Serageldin did. His investigation started in late 2012. In 2013, Serageldin was extradited from the UK to the USA to face the trial. In the trial, Kareem Serageldin pleaded guilty, and he was punished with 30 months of jail time and a $250,000 fine. Credit Suisse also took back his stock reward of $5.2 million. In addition to the jail time, he also faced financial repercussions. He had to pay $25.6 million in compensation to Credit Suisse, about $20 million of which he had earned by working at Credit Suisse till the year 2007. He also faced regulatory action. The U.S. Securities and Exchange Commission filed a lawsuit against him, which he settled in January 2014 by paying over $1 million. After this, he was effectively barred from working in the securities industry. This is how only one banker was jailed for the 2008 crisis. The crisis was so huge that it was unfair that only one banker faced legal consequences. No other bankers were punished for knowingly bundling bad loans into MBS products. None of the rating agency employees faced any consequences for falsely rating these MBS products. All this was blamed on this one person, and the business went on as usual. Anyway, check out this playlist to learn more about the 2008 crisis and The Big Short movie.